Hello and welcome to today's webinar. My name is Jamie Phelps and I'm the Client Success Lead here at Voyant. Today we're going to walk through how to model term life and disability insurance policies in Voyant. We'll be looking at the US version of the product today, and I'll be giving you tools to assess your client's coverage needs. By the end of this session, you'll be able to provide customized, comprehensive advice, showing the importance of these strategies in protecting clients against unexpected life events. Please note that this session is being recorded and we will send out a recording within 24 hours of the webinar's conclusion. We won't be taking live questions during the session, but feel free to reach out afterward at support@planwithvoyant.com if you have any questions. Today we're going to be looking at Sean and Jean Monroe. They're a couple in their mid-40s with a young child, and we'll be exploring two key scenarios. The first is going to be a term life insurance need, ensuring that they have sufficient coverage to financially protect their family in the event of an untimely death. And the second is going to be a disability insurance need. We're going to be evaluating the need for disability coverage should either spouse be unable to work for an extended period. So let's start by going to our insights section here, and we're going to scroll down to our life needs insight. We're going to start here and we're going to assess this couple's need for term life insurance. We don't currently have any insurance policies in their plan, so we're going to be starting from scratch and taking a look at what they need. The system simulates mortalities in the second year of the plan when you run this insight, and it's going to be offering insights into the financial picture if one spouse were to pass unexpectedly. A couple of things to keep in mind whenever it runs this insight is you can look at the chart view of either spouse passing. So it's going to start by showing you the chart of the primary spouse in the plan, and then you can also look at the secondary spouse in the plan, and it'll show you how this would affect the client's plans. What it's going to simulate, you can look at in year view if you'd like to get a clearer picture. It's going to simulate their income and any contributions that they're making to investments or retirement accounts falling out of the plan. You can see in the first year of the plan, we've got Jean's income of $110,000 in the plan, but in the second year where we're simulating her mortality, that has fallen out of the plan. Sean is receiving some Social Security survivor benefits, and we are leaving the expenses at the same amount, and any contributions to her 401k have stopped and it's been transferred into a beneficiary IRA in Sean's. So that is how the software is going to simulate her passing, and that is why we're getting these numbers that we're getting here. What we can do with this simulation is take a look at adding in a couple of term life policies based on these numbers. One thing you might consider doing when you're running these insights for your clients is creating a what-if scenario where you slightly reduce their expenses so that you can maybe simulate what it would look like if their expenses were slightly reduced with one of the clients passing. But that is going to be up to you as the advisor to decide whether or not you want to simulate it that way. In this example, I'm just going to keep their expenses exactly the same level. So I'm going to go back to our dashboard, and we're going to add in a couple of policies based on the numbers that we just saw. So we're going to go to the insurance tab. I'm going to select term life. And for Sean, I'm going to add in a term life policy. We're going to do a personal policy. We'll keep it at a 20-year term. Benefit amount, I'm going to round up to 1.2 million, and we're going to do a premium amount of $75 a month. And we're going to go to our beneficiary section and make sure that his spouse is listed as the beneficiary, and double checking everything is complete. I'm going to save and add another. We're going to enter one for Jean, Jean's term life. We're going to select personal, enter her benefit amount, and I'm going to round up to 1.6 million. We're going to enter in an estimated premium amount of $90 monthly, and you're just going to enter in the policy that you're recommending. And then under beneficiary, we're going to select her spouse as the beneficiary, and we're going to click Done to save. Now, if we go back to our insight, we can run this with our client and show them how they would be protected in the event of an untimely death. You can click Get Started, and you can run the simulation and show the effect that this would have on their plan. You can now see that they have 0 additional life insurance needed, and you can go to Year View and scroll over to that mortality event, and you can see that life insurance payout coming into the plan down here under cash flow. And you can do the same by switching over to Jean's chart, switching on Year View, scroll over to that second year where the mortality has been simulated, and you'll see her payout as well. Additionally, if you want to show them what would happen if they were to both die today, what would happen to their child's legacy, you can go to Overview, Legacy, select if both die today scenario, and this would give you a total wealth transfer after tax number that would give them an idea of how much money that they would be passed on to their child. And if you turn on the details section here, you can see those life insurance payouts from both of the clients here in the details of both, so that they can get an idea of exactly how much would be left to their child in the event of them both passing today. The next thing I want to take a look at is a disability insurance scenario. So let's go again to our Insights tab, and we're going to go to the Disability Insurance Insight. And I'm going to run this insight just for 3 years at age 55 for both Jean and Sean. So we'll start by running it for Jean. And what I want to do is see what it would do to their plan if she were not to be able to work for 3 years starting at age 55. So let's click Get Started. And you can see there would be an income loss of $271,478. It wouldn't cause any additional shortfall, but let's turn on the details and see what's going on beneath the surface. You can see at age 55, when this disability event occurs, that we are having to pull from some taxable savings in those years, and then in the third year, they're tax-free savings. So they're not able to meet all of their expense needs with the other spouse's income. They are going to have to draw down from some of their liquid assets. So that is something to keep in mind, because that would pull from their available assets for retirement. So if you click on Compare to Plan and switch over to your assets chart, you can pop off the main residence, and we can just look at how this affects their liquid assets. So down here below, we have our base plan where there is no disability event. And up here, we have the insight where we do have the disability event. And this is the event where they're having to draw down from their liquid assets to cover their expenses when she's having this 3 years of disability. If you scroll to the final year in the chart, you can see what's left in their assets in the final year. And you can see that there's over $1 million in difference between the two plans. And that's because of what they had to draw down on in these early years. They lost out on all of that compound growth over time. So it does have quite an effect on their overall estate. If you wanted to make some recommendations about disability insurance and protecting their overall assets in the long run, this is a good way to demonstrate the value of having that policy in place. And you can do so by going to this assets chart in this example. And we can do the same thing if we go to Sean and run the same simulation for him as well. And we can look at what the effect would be on the loss of his income, turn on the details, and you can again see that while it's not causing any additional shortfall in the long run, they are going to have to draw down from their liquid assets to cover their expenses in those years. Again, we can go to Compare to Plan, compare the assets in the long run, pull out the house, just look at our liquid assets, and you can see again, we have quite a difference in the final tally for their liquid assets in the final year. Use that as a visual justification for having some protection in place in case of such a scenario. Using the numbers here that we have seen as the income loss numbers, you can make a recommendation based on this information as far as the disability insurance you're going to recommend. So I'm going to go to my plus button here, and we're going to go to insurance, and we can put a couple of disability insurance policies in place. So Sean's disability insurance, and we're going to do an estimated premium amount, and we're going to do an estimated coverage amount, let's say $85,000, just to cover those withdrawals that they would need. And we can do a 3-year duration, and we'll click save and add another, and we'll do Jean's as well. So Jean's disability insurance, and we'll do a premium of $25 a month, coverage amount of $90,000 a year, and we'll do the same duration, and click done to save. And now if we go back and rerun that insight with the client, we can show the effect of having the insurance in place and not drawing down on those liquid assets. We've got a little bit of income loss, but we now have this insurance being used to make up the difference, and they're not having to pull from any of their liquid assets. So you can see here in green, as you hover over the chart, we've got this insurance policy being drawn down on, $85,000 in coverage. And then if we move over to Jean and run it for her, you can see the same thing. We'll have her insurance policy being drawn down on, and she has $90,000 here in coverage, and they're not having to pull from any of their liquid assets. So that's how you can demonstrate the value of having some protection in place to protect their assets in the long run. Thank you for attending today's webinar on modeling term life and disability insurance policies in Voyant to help protect your client's financial security. If you have further questions or would like one-on-one assistance, please don't hesitate to reach out to us at support@planwithvoyant.com. You can also send me a plan that you're working on if you'd like for me to take a look at it by clicking the name of your client in the top right corner, request support, enter your question into the text box, and share client access. I'd be happy to set up a time to review your plans and help you prepare for an upcoming client presentation. Thank you again for attending, and have a great day.